The market has been speculating for months about when the Federal Reserve will start cutting interest rates. And now, with the latest US economic data in hand, it seems highly possible that the long-awaited rate cut is just around the corner, possibly at the upcoming September meeting. But here's the big question: how much will they cut? Will it be a more cautious 25 basis points? Or are we looking at a more aggressive 50 basis point reduction? In this video, we'll break down the key economic data and show you exactly why the rate cut is almost inevitable, and what it could mean for the markets and of course some trading ideas. But before we dive in, don't forget to subscribe to our YouTube channel and turn on notifications so you're always in the know with our latest market insights and updates. First, let's start with the recent PCE Price Index, the Federal Reserve's preferred inflation gauge. It was steady at 2.5%, just a bit lower than the expected 2.6%. This slight drop is crucial because it strengthens the case for an interest rate cut, which, as you can imagine, has been warmly welcomed by the markets. In response, the US stock market rallied on the news. Soon after the PCE data was released, according to the FedWatch tool, there's a 70% probability of a 25 basis point cut and a 30% chance for a more aggressive 50 basis point cut at the September meeting. Next, turning our attention to the labor market. In August, non-farm payrolls increased by 142,000, which fell short of expectations. However, the unemployment rate dropped to 4.2%, which aligns with estimates. This mixed data suggested an orderly labor market slowdown continued and probably did not warrant a big interest rate cut from the Federal Reserve in September. The likelihood of a 25 basis point rate cut jumped to 75%, according to FedWatch tool. Next, how could we forget about the CPI data, the second most crucial inflation indicator on the Fed's radar? Consumer prices in August rose by 2.5% year-on-year, which is perfectly in line with the forecast. This expected result almost solidified the market's expectation of a 25 basis point Fed rate cut, with the odds now as high as 80%. One key opportunity you don't want to miss at the upcoming FOMC meeting is the potential in gold trading. With the market preparing for the anticipated Federal Reserve rate cut, gold prices are likely to experience heightened volatility. On the other hand, the recent economic data and market sentiment are now pointing towards a bullish bias for gold in the short term. A 25 basis point rate cut at the September meeting, in response to softer US economic data, could push prices toward the technical resistance zone of $2,635 to $2,702. But here's where it gets interesting: if the Fed opts for a more aggressive 50 basis point cut, we could see gold prices surge even higher. Now, let's turn to one of the most traded currency pairs, EURUSD. Following a recent 25 basis points rate cut by the European Central Bank, in addition to high hopes for a 50 basis point Fed rate cut, the currency pair rebounded from its previous downward trend. What's more, the market expects further rate cuts of 125 basis points this year, which could strengthen EURUSD further. However, aside from the FOMC meeting, traders should also keep an eye on Eurozone economic data, inflation trends, ECB policy decisions, and geopolitical risks. From a technical perspective, if EURUSD fails to break below the 10-day moving average at 1.0925 following the Fed rate decision, it may rise to test the resistance at the 1.12 level, which is its highest point in August. If the pair moves beyond this resistance, it could trend toward the first target of 1.1276, followed by the next resistance level at 1.1372. Conversely, if EURUSD breaks below the 10-day moving average and breaches the lower boundary of the upward channel, the pair may extend its decline toward key support levels at 1.0960 and 1.0862. That's all for the video. Remember, the above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates.